What would be your thoughts
Yeah.
for the near term, given the fact that the monsoon session has seemed to be a washout globally? Things are looking fairly okay for the markets at large, but it's clearly the US Fed rate hike that seems to be looming on everyone's minds. So your thoughts in light of all of this?
Yeah, there are very large changes happening, which are going to be impactful for the market. First thing is that commodity collapse has been very sharp across the category, whether it is soft commodity or hard commodity. Oil has slumped, iron ore has slumped, aluminum, zinc, all the soft commodities, soya, vegetable oil, sugar, cotton, whatever you name it, everything has collapsed. So that has a huge impact on the companies which are producing it. Clearly, they don't know what to do with their loans and leverages and the operating margin, the cost which they have taken up. In India, typically the fixed cost structure is very high, and there is a lot of restriction on hiring and firing. So I think these companies will have very challenging quarters going ahead. But the second aspect is that reaction of the action is the benefit to the using industry. So some of the companies like Maruti, Britannia, Asian Paints, Pidilite, all these companies which have pricing power, they are seeing like unprecedented increase in the operating margin, and they are winning all over. So 400, 500 bips increase. So these are two speed kind of market, one where actually it is negative, and other which is explosively positive, more in the terms of 40 to 60% kind of earnings growth. So clearly markets, my sense is aggregate market will remain in slow mode even in near future for 2-3 quarters till the green shoots of the economy become much more widespread. I don't think that downside is very limited. I would be very surprised if markets fall even 10% from here. But upside is, I mean, widespread upside is at index level looks to be very limited for me. That's what my sense is.
Mr. Agrawal, you did talk about the commodity crash. So tell us how big a tailwind would the commodity price crash would be for the Indian market, and would companies continue to see benefits for longer than what people think right now?
Yes, I think first thing is that market is yet in the state of shock that the benefits are for real. Is it a 1 quarter? Is it 2 quarters? My sense is that the collapse of oil price is a decadal moment. The first decade saw the oil price going from 25 to 125, and that destroyed the oil companies, that destroyed the country's fiscal. Now, and that got associated with other commodities also, incidentally. All hard commodities went through the roof. Iron ore prices went from 25 to say 180 and things like that. So clearly, it had a defining impact on the kind of corporates which won in the stock market, because in the stock market what you look for is the companies which make a lot of money, and these companies, they made a lot of money in the first decade. Now the second decade is defined by collapse in the oil price from 100, 120 to more like 50, 60, 70 dollars. So I think this particular thing has just about happened. The market is still grappling with the extent of decline, and my sense is that oil companies and the whole lot of companies, chemical companies, they have this raw material which is coming from petroleum based products, say tire companies. So tire is nothing but a bundle of petrochemical products. So their margins are positively impacted big time. So we have to see where is the growth, where is the quality, where is the margins, and those companies will win, these companies will lose. And at some point of time, in next 6 months time, my sense is market will realize, and by that time I think hopefully the Indian economy also picks up. So by second half we should see very exciting time here.
So my takeaway, Ramdeo, from that answer is that when it comes to stock selection, you are looking at companies that will benefit from the economic outlook, because as of now, they might not be looking very robust as of now. So is that what is going to be the, your stock picking mantra? And you are seeing export oriented themes, domestic plays. Where is it that you're seeing potential as well?
See, in our portfolio strategy, clearly the mantra is QGLP, quality, growth, longevity at reasonable price. So we are not going to go away from that, irrespective of what happens in the market. Of course, market has been in slow mode as far as the so-called low quality companies are concerned, and we are going to see widespread growth coming into not so high quality of company as the economy picks up. But we are not going to change the track. We are going to stay on to the high quality companies, and so we are not against any sector, or whether it is export oriented, or whether it is in even in commodity, or whether it is in infrastructure or whatever. The companies which make money, which are managed well, and which take care of minority shareholders, I think those are the companies which we are going to buy. We are going to buy for many years, and we are going to hold. So we don't change the strategy as the economy changes its track. So hopefully we are able to, we are able to find some good stocks for our portfolios when the tide turns in the market.
Point noted, Ramdeo. Thanks very much for taking time out and chatting with us, sharing your business outlook as well as your take on the markets. Thanks for joining us.